Welcome back to CapexForexTrading.com. In this video we're going to discuss the risk-reward ratio because this is something that every trader needs to include within their money management techniques. Now you may know or have heard of traders who generate more winning trades than losing trades but still lose money. So their wins tend to be constant and frequent and are usually the same amount in every single trade. But then a single loss takes out either 2 or 3 of their winners, and in the end they end up in a losing position for the day. Now, one of the reasons for this could be that the risk-reward ratio is not correct. So what is risk-reward? In terms of its definition, the risk is obviously the amount of money you're willing to risk within a trade, and the reward is the potential profit target that you're aiming to get. So in terms of the ratio between the two, what is recommended? Well, professional traders recommend a risk-reward ratio of 1 to 3. So this means that your reward is 3 times the amount of that risk. So basically, if you lose once, you still have another 2 trades worth of winnings to rely on. In reality, a good risk-reward ratio to use is 1 to 2. So your reward is double of the risk that you're willing to put up in the market. So in terms of our calculation, the only thing that we need to do is divide the reward by the risk to see what ratio is relative to our trade. So let's say, for the sake of the argument, that our reward or our potential profit target will provide for us $100. The risk that we're putting up is $50. So if you divide 100 by 50, the answer is 2. So our risk-reward ratio is 1 to 2. So that means that our reward is double compared to the risk that we're looking to put up in the market. So let's look at a risk-reward ratio example in our charts. So the area that we're looking at is here. Okay, so what we're looking for is an entry just a few pips above this high here, and our profit target is somewhere that's relative to this previous high. So let's just define those by a horizontal line. So we got our entry here, which has been hit by this candle, and our profit target is just a few pips below the previous high, which is here, which has obviously been hit by this long white candle. Now our risk or our stop loss is going to be just a few pips below this low here. So we're going to take a horizontal line again and just put it a few pips below that previous low. Now you can see with the naked eye that our reward, which is this area here, is almost double the size, if not double the size, of our risk area, which is here. So we have 2 areas, the reward area and the risk area. So in terms of our calculations, let's say that our profit target would generate $100 when it reaches this profit line here. And unfortunately, if our stop loss is hit, we will lose $50, and our stop loss line is here. Now, if we do this on every single trade, all we need is 1 win out of 2 to basically be in a profit-making position. So that concludes this lesson. If you have any questions or comments, do let us know. Please subscribe to our video channel or follow us on Facebook, Twitter, Google+, or LinkedIn, and we shall see you for the next lesson. Thanks.